Hey, good morning, folks, and welcome to. I'm a bit late here this morning, again with technology. Welcome to Swing Trading Today. And we have a big day going on here in that we are attempting to go live on not on one platform, which is usually YouTube, but we're attempting to go live on multiple platforms using a new platform to help broadcast, simulcast, that's my new word lately I use, to simulcast across Facebook and Twitter I apologize for the dead air. I'm looking to see whether or not we're live on those venues. I know we're live on Facebook, so I'm sorry, YouTube. So good morning, YouTube. And we're having limited success this morning, so this is going to be a work in progress. Still not fixed here. Note to developers, get this fixed. Hey, good morning, Trent. Okay. Limited success here. All right, so I'm glad that we're live on YouTube. That's my mainstay. All right. So we're going to go here. 5:13. I don't want to keep everybody waiting. I have two monitors that I'm using this morning. One is for production purposes, and the other one is for you folks to screen share. So forgive me for not looking at the camera and being preoccupied. We will get this fixed fairly soon. The goal here is to try to broaden the message out about technical analysis, about what the Federal Reserve is doing, how to trade it. You know, while we believe that the markets are going to move higher here longer term, I think that the Federal Reserve is setting the stage for one of the greatest trades ever, and that is going to be to the short side. And the other trade is the gold and silver trades, of which we are a part of already. So we want everybody to be a part of it, because after this bubble breaks, it's not going to be pretty out there. So please stick around. If you haven't already hit that like button, please do so. Follow, share with a friend, get them to join in each morning, or at least watch the replay. I don't expect everybody to get up at these ungodly hours, but it's great to have you here. And let's get to it. Okay, let's start off with a headline here. Morgan Stanley calls it. Friday marked the high for stocks. Now comes the selling. Here you go. Morgan Stanley, I think, has it wrong. Michael Wilson, who is the equity strategist over at Morgan, he's been bearish for a while now, and he's been wrong for a while now. It's going to be very difficult to short this market when you have an activist Federal Reserve. It's going to be hard to short this market when you have 2020 elections coming and you have a president that is dead set on getting reelected vis-a-vis using the stock market as a barometer. Why you want to short into the powers that be, I have no idea. So might you want to short individual names that have technical breakdowns setting up? Sure, there's always going to be that case to short something. But overall, these markets appear poised to move higher. Now, today is bank earnings day. Yeah, right. It is. You're right, Trent. Morgan's, that's a nice contrarian indicator. Yep, you're right. So today's earnings day, we have Citigroup, Citibank, whatever they're calling themselves nowadays. We have JP Morgan Chase, the pimp Mac Daddy of them all. Then Wells Fargo, Banksters. What else do we have? Goldman, the other set of banksters. So they're all reporting today. The money center banks reporting today throughout the week. This week is Money Center Bank Week. So what do we watch out for with their earnings? Okay, so they're all going to come out, and in all probability, they're going to beat by a penny. The thing to watch is not their beat by the penny, not their backslapping of how well they did that quarter. What you need to watch out for are revenues. Then after you look at their revenues, you want to take a look at where those revenues came from. Were they loans or were they from trading? If they're from loans, that's a more promising revenue stream than what is trading, which is far more sporadic. So keep an eye on those numbers and also take a look at forward-looking guidance. That's what matters. The market is going to be paying attention to it. While the market is not currently extremely expensive, it's not cheap either. So you have economic data that is weakening, no doubt about it, not just here in the States, but globally. So forward-looking guidance is going to be very, very important to get multiple expansion. So keep an eye on forward-looking guidance, and let's get on to the charts to help support why I believe that we're going to move higher here in the coming days and weeks. Now, the chart I want to go over first is a quarterly chart, that really high-level view of the market. A quarterly view, and granted, we're only 1 month into Q4. And you can see that we've been consolidating ever since the April quarter, which was Q2, Q3, the July quarter, consolidating, bottoming action, right? We like to see that consolidation. Then this quarter, we're only 15 days into this quarter. And in fact, I'm going to digress here intentionally, 15 days sober October today, down 7 pounds. So I went with no booze, no carbs, 15 days, down about 7 pounds. So why am I patting myself on the back? Because I went out to Bobby Van's with a bunch of friends and family on Saturday night. We had friends in from Italy, and we took them out. Great time, but they partied it up, teased me all night long because I was drinking seltzer. To her credit, my wife did the same thing, except she drank Diet Coke. And we had a great ribeye, delicious ribeye. All I wanted was a great glass of Merlot, Beaujolais, something. Couldn't have it. I had seltzer. Good seltzer, the best seltzer I ever had in my life, though. So, rough night, but a good time. But I sacrificed. So we're into the home stretch now. Can't wait for November the 1st. Cigar, single malt, would be nice Friday night. November the 1st is a Friday night. All right, I digress. Sorry. All right, so we are holding support here. I think that we break out on a quarterly basis. I'm going to give you my price target on this market in a moment. We were buyers of the small caps last week. We booked profits on that trade last night with Market Wrap. I discussed with members the scenario by which we want to get long yet again of this market. So we are bullish on a quarterly basis, that really high level view. Now, our indicators look okay. We're very extended on Stokes, but history has shown us that we can get more extended. So we don't want to base our directional play on the market based upon one indicator. It's only one indicator, and they can get skewed during a consolidation. You want to pay attention to your indicators when they begin to roll over and break to new lower lows or break out to new higher highs. Now, taking a look at the S&P 500 on a weekly basis, it becomes more interesting and more dire. So we did our deep dive of the S&P 500 from that higher level view. Now I want to drill down and I want to take a look at the price action on a weekly basis, because from this perspective, things become a lot more speculative. Because when you take a look at this chart, we broke down below this rising lower band of support back here in Q4 2018. It's a year ago. And ever since, we have been attempting to rally back and recapture what was prior support. They are trying to now make a like button. Please click the like button, please. No, what they're trying to do is trying to make prior support a new lower support again, but now it's acting as resistance. So this is a good indicator of what will be resistance moving forward. I do believe that they're going to break it out of this consolidation. One could argue, and they would be right, if we break to new lower lows, that we do have a lower high. But at current, we haven't broken down to a new lower low. Therefore, the trend is still up. You can't short this market just yet. And I think that we're going up to the 3,300 mark on the S&P 500. I'm looking for a blow-off top here on this market. Now, overlaid here, you can see I have gold. And gold has been rallying ever since 2016, along with the S&P 500. Generally, they trade in tandem. You get weakness on the S&P 500, then gold rallies and vice versa. But net, the weekly overlay here implies that we have higher highs, especially in 2018, on both the S&P 500 and gold. Each have been stalling out these past several weeks. And overlaid here, we have the 10-year overlaid with the 3-month Treasury yield. And you can see that we have a yield curve that is steepening. And that's when troubles begin in the market. Not when you have a inversion of the yield curve. That's just an indicator that you need to start worrying about recession. When you need to start worrying about a sell-off in the markets is when the yield curve begins to steepen. And you're beginning to see that now on the yield curve. And when this occurred last back here in 2007, that was a precursor for a rollover and the financial crisis. Now, what we need to keep in mind is that in general, what happens here, and nobody wants to talk about this, and this holds true for not just the 3-month versus the 10-year yield, it holds true for the 2-year versus the 10-year inversion as well. That yield curve, you usually get a double bottom on the yield curve. And after you get that second leg of a double bottom or a W formation, you get a steepening of the yield curve. That's when it's all over, right? The fat lady is sung. It's all over. The market may have, as it did back here in 2007, put it a higher high versus the prior high. It may do that yet again, but beware. Be very, very afraid of the market once we get that double bottom retest on the yield curve and we begin to steepen yet again. In the short term, right now, I think we're going to get a blow off top on this market, probably a consolidation into the 2020 elections. After the 2020 elections, I think that we are going to roll over. Let's go to the pre-market activity. I started a year late. I don't want to keep everybody on long here this morning. Yeah, 5:24 already. This is the S&P E-minis. Let's begin here. We are up 1/3 of a percentage point this morning. We are looking good. A little bit of topping action in this last bar. I think that we're breaking out here, folks. It all depends upon bank earnings. It's probably too early for JP Morgan to have issued earnings, but they will do so in a short while. Yeah, they haven't issued yet. So this price action on the overall markets, on the individual banks, does not reflect their earnings, which are coming out shortly. Let's take a look at the other major indexes and how they're performing. And this could all change very, very soon. Let's go with the NASDAQ. The NASDAQ is looking good. We broke out here on this. These are all 4-hour charts, folks. We broke out yesterday above this upper band of resistance. We are rallying. And what we need to see is this support level hold. And if it doesn't, if we roll over, look no further than the bank earnings reports. I know this is the NASDAQ. You don't have many banks in there, but they will trade along with the overall markets. Because remember, if bank earnings aren't good, that sets the tone for the entire earnings season early on. And it's only until the next about 2-3 weeks where we get technology firms, the high beta names, reporting earnings. And so right now we are in the land of bank earnings, and that's all that really matters. Let's go to the Russell 2000. Now, we booked profits here last week. We were buying here. Remember last week, you had the headlines that were out here. The futures down. The markets are selling off. And the reason why they were selling off is because the Chinese negotiators were going to go home a day early. I'm like, this is nonsense. It's more the algos reading the headlines, scraping the headlines, and not paying attention to the fact that we have QE. We were given a gift. Why are we going to sell this market? And we were buying in here. We broke out and we booked profits here as we rallied up and through the third standard deviation Bollinger Band on a 4-hour basis. And we've pulled back. Now we're looking to get back long. I want to see how the markets open up today. And we will look to open up a new trade on the Russell 2000 and perhaps some other sectors late in the day. As always, I want to see how we close on the day. I don't care about how we open. I don't care about what we do intraday. What matters is where we close. So the Russell this morning up about 1/3 of a percentage point. We're off the highs of the session. But again, we have not been influenced yet by the earnings reports out of the big banks. The 10-year Treasury note, this is really an influencer of the commodities market, in particular gold, silver. And you could see that while we're up, we're stalling out here a little bit. We've seen some weakness of late in the bond market. We double topped out here. We have we have lower highs. And what we need to see, I don't think we're going to hold here. I think we're going to pull back. And that's going to put pressure on the miners. What we need to see is a pullback, but a higher low versus the lows of the 11th. If you are bullish on gold, if you're bullish on the gold miners, if you're bullish on silver, the 10-year Treasury yield is an influencer. Taking a look at the US dollar, attempting to recapture support. This 4-hour bar opened up only 29 minutes ago. It will close at 9 a.m. Eastern Standard Time. Let's see whether or not it closes above the support level, as it did not this last 4-hour bar. It flashed a doji formation, a sign of indecision. So there's a tug of war between bulls and bears on an intraday basis as to where the dollar is going to go. Why does the dollar matter? It's because we have commodities that are priced in US dollars. And in particular, gold. Now, gold was lower earlier, and we have since turned positive. Now, the fact that we've turned positive means nothing to me. What means everything to me at current is a close back above the 1500 mark. It's psychological support. It was a support level which being defended. It is no longer being defended. You're now seeing sellers at that resistance level. So I don't want to be involved any longer, or I don't want to add any more to my gold mining trade until such time as we rally up and through the 1500 level, and ideally up and through the 1520 level, and then we will look to add to our gold mining trade. Until then, we're bystanders. We're selling covered calls on our NUGT position, and we're holding it at current. We're bringing in premium, and we're letting the shares work for us, generating cash flow while we wait for a breakout. Silver, higher lows. Now, unlike gold, who's been very, very volatile of late, silver has been doing very, very well. It hasn't broken out, but it is holding its own in a trading range. No real pressure on silver, as we've seen with gold and the miners. What we're looking for here is a breakout above. These are these silver futures. A breakout and above the 17.92 level, and then it's game on to the long side for silver. So silver 4-hour base is looking good. It is not a buy yet. I'm bullish, but it's not a buy yet. We want to buy strength. Copper. It recovered from yesterday's weakness when I last recorded. We're seeing weakness again this morning. We have, at current, a breakout point failure, meaning that we broke out here on the 11th, then rolled over and failed to hold support. We broke out yet again on the 14th, the 9 a.m. 4-hour bar, rolled over and broke back down below support earlier this morning. Not good. So copper under pressure. Why am I going over copper? Do I trade copper? No. It's a barometer for global growth. So we take a look at it from time to time because we're supposed to have a trade deal, right? And while I'm going into my tirade right now, if you wouldn't mind hitting that like button, if you want me to go over a couple of symbols, I think we have enough time to do that. I'll be more than happy to go over those symbols for you since you got up at this ungodly hour to join me here. So we're looking at copper. We're looking at soybeans to take a look at, do we really have a trade deal? Or has it already been priced into the market? What I'm looking at right now is copper, which is not making any headway. While we do have a new weekly intra-week high, we do not have a new closing high versus last week. And in fact, we're rolling over here a bit. So do we have a trade deal that is healthy? I'm not getting that. I'm not getting the warm and fuzzies here. I think not. I think the president had to remove it from. You got it, Trent. The pound versus USD, the pairs trade. Gotcha. Soybeans, you can see that we announced last Friday, we shot up higher, knee-jerk reaction. Now we are rolling over. We had a sell the news event. Potential double top here. The trend is still up, but watch for a breakdown below the lows of the 14th. If we break down below those lows, you know that we don't have a real rock-solid trade deal. It's already priced into the soybean market. Remember, the president was out there, $50 billion worth of soybeans. Farmers go buy new land. You need to see a continuation rally in the soybean market for us to believe that we have any teeth in this trade deal that would benefit the U.S. farmer and the U.S. consumer. I saw nothing. All I care about in a trade deal is intellectual property rights. In essence, the Chinese stop stealing our technology. How we've allowed this to happen for some 20-odd years is criminal. It's criminal. What these presidents, I don't care if it's Democrat, I don't care if it's Republican, a pox on all their houses for what they did to this country. A pox on all their houses. I could go on with this for hours, what they've done. And now we have to fight the good fight of trying to get back to where we once were. And we have a lot of headwinds in front of us vis-a-vis debt. And sorry, we have a couple of generations below my generation, which are simply ignorant of the times that we live in, our history, And frankly, my generation didn't help them at all with the educational system. So we have a lot of problems here. I digress. I can go on with this. So let's take a look at Nat Gas. And we'll go to that pairs trade that Trent wanted. Nat Gas was behaving well. We have pulled back. Is this a breakout? We broke out here on the 14th, failed here on the 14th, then later rallied back on the 14th. A lot of volatility here in Nat Gas. And at current, we are retesting, as we did this last bar, 4-hour bar, retesting support. We're doing so yet again on this 5 a.m. bar, which closes at 9 a.m. Eastern Standard Time. So natural gas looking fairly good. But I wouldn't be a buyer on a short-term basis using 4-hour charts until we rallied up and through resistance here in green at, let's call it, the 2-spot 2-8 level on natural gas futures. All right, let's find that. Yeah, Trent, it's horrible, right? It's so horrible, Trent. I don't even want to think about it. It really gets me angry just thinking about it. You see the headlines as fake news and all these Antifa people. It makes me physically ill. Okay, so census view, Trent. Let's pull back. Go with a weekly view first. All right, so the macro view here is that we are nearing heavy resistance on a weekly basis. Weekly chart, upper band of resistance. We are at current trading above the 20-period moving average, but it is declining. So normally what happens here is that if we are to get a breakout, and I think that it would be good for Great Britain, either way, a deal or a hard Brexit, just to get out of the European Union. The European Union is, from my perspective, I know others have different opinions. They've told me that on Swing Trading today, and that's the value of having these live conversations, is that you could, if I can have one opinion, you could have a different opinion, and that's great. I love the banter. I love the debate. That's what makes free speech, right? And it is under pressure, especially over there in Great Britain. Not for nothing. EU, France, free speech under pressure, and not for nothing here in the United States on certain social media platforms, which will go unnamed for fear of censorship. So the British pound is rallying versus the U.S. dollar. I believe it to be underlying strength of the pound relative to the weakness of the U.S. dollar. And we may pull back here, get a higher low. I think that would be a good thing. That'll flatten out this 20-period moving average. And if we do close down below it, the flattening of that 20-period moving average will allow for an easier next attempt to rally beyond and through it. And the next stop will be a close above this upper band of resistance on a weekly basis. And you can forget everything I've said so far. What you need to see is a close above this upper band of resistance on a weekly basis. And let's call it 1-spot 2-8 for a clean breakout. So I would not open up a trade to the long side on the British pound at current, because you have immediately above a lot of overhead supply. Daily chart. Yeah. So big move higher here. As recently as the 11th, we were trading above the 3rd standard deviation Bollinger Band. We are now resolving that overbought condition on the Bollingers. And for those not familiar with the Bollinger Bands, I use the 3rd standard deviation Bollinger Band. It's a really higher level of an overbought condition. Your typical out-of-the-box Bollinger Bands that you get on your trading software is a 2 standard deviation Bollinger Band. I like to use a 3 because when you get a stock, or in this case a currency, trading above it, it makes it all that much more abnormal. And you know that in all probability, you're going to get a short term fairly soon because, in essence, I'll save you the technical jargon, you're not supposed to be there, right? On a 20 period, relative to a 20 period moving average, you're extended beyond that 20 period moving average way too far. You're not supposed to be there. And it need not necessarily get resolved with a sell-off. You could just simply trade sideways and then proceed higher. So it doesn't necessarily mean sell your British pounds. It could mean you want to hedge your position or book a little bit of profits, then buy the pullback, and then look to add more as you rally up and through resistance. So that's what I'm looking at right now, is a sideways consolidation, alleviating that overbought condition on the Bollingers. And we are flirting with an attempt to try to rally through resistance. To garner enough momentum, I think that we need to consolidate further, if not pull back further, and then allowing for a nice breakout of a bull flag setup. And then you'll have a lot of technical buyers like me looking to buy that breakout on the bull flag setup or triangle formation, allowing the shares to then rally up and into resistance. Expect some profit taking, then look for a close above resistance. If you get that close, that is in all probability your buy signal. I would use a weekly chart, me personally. If you're a short-term day trader, use a 4-hour chart, use a daily chart, that's fine as well. Now, on a 4-hour basis, I'm looking at a double top here. And that may lead us to that pullback to a higher low relative to this prior low here seen on the 14th. If we hold it, we form a double bottom or a higher low, that sets the stage for a new leg higher on the British pound and sets us up for a challenge of weekly resistance. So I wouldn't be a buyer here just yet. And to point out how overbought we were relative to the third standard deviation Bollinger Band on Friday, take a look at RSI. We're above the 84 mark on RSI at its peak. So you knew you're going to get a pullback. Net, I like the British pound relative to the US dollar. But keep in mind, you do have Brexit coming up in very, very short order. Headlines are going to be coming rapid fire fairly soon out of the EU, out of Great Britain. And a lot of it's going to be fear-mongering to try to scare the people into an extension of a Brexit deal. The EU will help make that happen. And the Remainers in Great Britain will try to make that happen. Thank you, George Soros, you piece of human waste. So that is it for this morning, folks. And I want to say thank you for joining me and dealing with my technical issues. We will resolve them. And I want to scroll through here to see if we ever went live on Twitch. And Twitch is important to me, although it's a gaming channel. Nope, we never did. I want to get to the newer viewer, that younger generation, because that's our future. And I want to get our word spread far and wide of contrarian trading. Looking at the, you bet, anytime, Trent. Thanks for joining as usual, man. We want to get the word out there on multiple platforms and educate people on what's going on out there with the central banksters, how to use the charts and how to set up for that really big short that's coming. That's going to make the other big short look like a correction. It's going to be big, and we want to get people long of gold and the miners because that's going to be the place to go. That's your safe haven play as the markets are declining during this time of QE. And if you haven't hit that like button, folks, please click that like button. If you're watching this on YouTube and you haven't taken my survey yet, there's a survey down below. If I could ask you to take that survey, it takes 2 minutes to do, no personal information. And thanks for joining. Everybody have a profitable trading day. I'll talk to you tomorrow. Be well.